Hey, welcome back to Two Super Guys Red Sox. I'm Dylan.
Vinny?
We are going to talk about there's some stuff happening in Israel and Iran, and just through a investing lens, nothing else, kind of what wartime does to the market and stocks, and what you can kind of look at for your own portfolio. Um, Once again, not a political lens, just purely stock market. What is happening is not good. I think we all agree, right?
Hmm.
Yeah. Okay.
Yeah. I just expected to see a big red bar there at the end that I'm not seeing.
Oh yeah, yeah. No, that's well. I'm gonna get to that. So this is a zoomed in. This is like a 6 month view of the Qs. Okay, I now kind of default to the Qs over the SPY for market health because Qs have outclassed the SPY 20 years, and because we're more tech heavy, to me makes more sense. But there is no financials in the Qs. Um, Vinny, when a war breaks out, and there's a million variables for these things, so this is not a strict answer. What are the things you look at in terms of
I mean,
investing?
I know you see oil move a lot, right? Because like all of a sudden people are
It did.
wondering about shipping, international trade, like
Yeah.
that's a big issue. And then defense stocks, right? Because you're assuming they're going to start getting awarded contracts, right? And
Yep.
then the final thing you see is like a flight to safety, where you see like assets like gold or like low risk bonds start,
Yeah.
kind of moving around a lot. Because I think TLT moved this past Friday. Those are the classic like areas of refuge, if you will, in the storm.
Yeah. Japanese bonds also did pretty well. Um, the two we're not going to look at is gold and Bitcoin. Um, I don't know enough about Bitcoin, and ever since Bitcoin's involvement, gold has kind of changed the way it has in like the last 60 years because Bitcoin wasn't a thing. So we're gonna focus on. Vinny was right. Defense stocks, market as a whole, bonds, and oil. So here's a zoomed in market. All right. I'm going to go back 4 years. This is very zoomed out. Don't wait. We will zoom in. That's fine. But the two previous world events that are somewhat similar, not really, but close enough, are Russian invasion of Ukraine and then not the start, the most recent start of the Israel and Palestine conflict, the newest
Yeah, that
start.
October 7th attack, right? That's what you're
Yes,
saying there.
yes,
Yeah.
the newest start. But you can see the market overall, other than this right here, actually did quite well. All right. But what about those other sectors? So once again, this is the market as a whole. This is the Russian invasion of Ukraine. Okay. You can see we gapped down. This happened during the market. But before market open on a Thursday, we gapped way down, and then surprising to everybody, actually finished kind of positive, right? Now, you cannot blame all of this on this war because, as you can imagine, or you can see, we were actually already under this 200 moving average, and this is the first time we'd been there in kind of a while. So we were already in a downtrend. We hit here, and then we went down. Um,
Fair.
the October 7th issue. So that was a Saturday. So when I zoom out, for other stocks, you'll see big gaps up in defense stocks or oil stocks, that kind of stuff. In terms of the market as a whole, you can see it happened here. We had a little bit of a dip, and then we've just been going up ever since.
Yeah.
Okay.
Market
Now,
did not really care that much about it, I guess.
did not really care. So what I'm using here is XLE. It's just the spider fund for energy. I think about 40% of this fund is Chevron and Exxon,
Hmm.
um, and then a bunch of other smaller oil companies. But if you compare, so this is that Russian invasion of Ukraine immediately goes up, corrects a little bit, and just continues for a while. So oil,
2 months.
yeah, would have been a very solid buy. Okay,
Hmm.
let's go to. So once again, this happened on a weekend, so it happened in between these two candles. That's why there's a giant gap. But we were here, then the event happened. We jumped all the way up. This is a big jump. We go from 83 to 87. That's like a 4.5% jump. We went up
Interesting.
for a couple days and actually kind of corrected back downwards fairly quickly. All right, now Not all battles, not all wars are the same. There's different variables. There's different conflicts. It is what
Well,
it is.
I was just thinking, like Russia is like what one of the it's like number two petroleum exporter in the world or
Yeah.
something like. At least it was before this.
It
So it makes sense.
Russian and Iran too, which Iran was not in this one. It is in the current one happening.
Yeah.
Now this is XAR. This is a defense ETF. Same thing, Spider
Okay.
Fund. There's a more popular one. I think it's ITP. I compared the performance over 5 years, and this was slightly better in every single metric. So this, I believe, was smaller, but it had. I'll have to double check that, but it had equivalent to slightly better performance. So
Yeah.
I don't think you needed this arrow to see
Yeah.
when Russia invasion of Ukraine was. I mean, these are monster days. You know, this is going
Big white
from
bars.
106 all the way up to 113. 2 days later, up to the 120 range. That's
Perfect.
20% almost. That's insane. That's a lot.
Yeah.
Did correct over time though.
Hmm.
All right.
Surprised.
Now, obviously, we have this gap because this event happened on a weekend, the war between Israel and Palestine. We had a little bit of a correction and then straight up. Almost, this is a span of, what is this, 2 months. We went from 112-ish to about 138.
Wow. Yeah.
Yeah.
I don't know what to make out of these though, because we have two kind of conflicting patterns here. You have to think about the importance or what the products are, or what globally where these countries kind of participate in order to read the tea leaves a little bit. But it doesn't really make sense to me.
So I have a point for that. I agree with you because essentially it also depends on where we're at in the market cycle. And at Russia in February 24th, 2022, we had massive, massive expansion in the queues for 18 months straight. So
Hmm.
everyone and their mother was calling for a correction, and it started to correct already, and then that happened. So
Okay.
it's a little bit, like I said, it was already under the 200 moving average for a little bit. That was the Qs overall, not just the CTF. But when you already have that massive momentum downward and then a negative event happens, I mean, it is what it is, right? We've been
Interesting.
actually fairly positive for these. Bonds, I think, are actually going to be more useless. Okay, and the
Hmm.
reasoning is timing, not useless going forward. Useless in terms of I don't think we can derive a lot of information that's reliable from this. I've been seeing a lot of videos on Reddit people are saying you have to go to bonds now. That's how it works. And if you look at the past two wars, it's not the most reliable, and here's why.
Wow.
Look at all these cuts. We went from 0.25, 0.5, all the way up to 4.5 in a matter of 2.5 years. Okay.
Uh-huh. Yeah.
Russia was right before this. Russia was literally 1 month before this. Okay. So when you look at that, that is this one here. You can see yields went up, but you also expect that to happen because we were literally every 2 months we were increasing the federal funds rate. So
Yeah.
it's not really fair to say, well, it went up because of the Russia-Ukraine war, which is something I've been seeing everyone on Reddit say. We're literally increasing the federal funds rate every 2 months. Like we had to. Inflation was at 9% that month. Like it was eventually that was going to happen.
Yeah.
Um,
So Powell's stronger than Putin. I understand. Yeah.
I mean, in terms of this, yes. I don't know about anything else. Here is where you have the Israeli-Palestine conflict. We did drop, which is what you would expect. But once again, you're still in a very high inflation environment. You're going to have higher yields. So it did suppress it for a little bit. This one, for me, is more reliable because we were already towards, was it October 2023? We were already did the majority of the heavy, heavy increases, right? So
Okay.
that happened up here, and we had already hit our maximum rate. Okay?
Interesting.
Makes sense? Let me get out of this. Sorry.
No, you're good.
So for me, it looks like oil and defense stocks are a lot more reliable than bonds in terms of where do I stash my money. So
Okay.
I don't ever buy. Do you ever buy oil ETFs?
No. But I still own was it
Oxy?
Fang? Oxy.
Yeah.
That's the one I was trying to remember. I'm like a
Yeah.
small American oil company. Yeah.
Yeah. So I just bought more of that too. Um, it's I also bought more of it in my two very very young daughters fund for when AI takes all their jobs and they have to live off that. So
Cute.
yeah,
I love it.
gotta be prepared. Um, what's your take, man? Are you gonna move anything with your portfolio?
No, no, I'm holding steady. I'm not doing anything in response to this. I think this is going to be more of a pruning of the bush than it is like a full on war. So I'd be
Yeah,
surprised if this continues to have a significant impact upon global politics for more than the next couple months.
really? That's a hot take. You think that
Yeah,
this is gonna be over fairly quick
yeah.
in terms of like not mutually destructive, but just an agreement?
I'm not in agreement, but just like backing away from the table.
Okay, fair enough. All right. I'm actually going to buy more oil, and I'm actually specifically looking at Lockheed and Martin.
Sexy.
Those are my two, in case anyone asks.
All right, I like
No
it.
more bonds. All right, guys.
Some more.
Have a good one.
See you next.